Okay, what exactly is the momentum starter? So to identify the market bottom. So in short, this is one kind of the breadth trust. So in case you are not familiar with the breadth trust, so this is something like a momentum. So I think there are quite a number of the different kind of the breadth trust that's the traders or investors that refer to. But certainly this using the S&P 500 stocks above the 50-day MA is probably not the conventional type of the breadth trust. But somehow I just discovered this kind of the pattern, and also I think it just probably worth to explore a little deeper so that we all can benefit from this. So this works like a momentum indicator, and also we'll just study into the past bottoms since the global financial crisis 2008. So as you can see in this chart, there are two things that stands out. So first is definitely the Christmas sell-off. So close to 2019, that's during the 2018 Christmas, and also that's the COVID low here. So this two actually marks the bottom of the correspondent S&P 500 here. So you can definitely tell from the S&P 500 chart. So that certainly work as a shakeout, and this is definitely a bear market sell-off or a totally collapse in the market. And if you look at the S&P 500 stocks above the 50-day average, there are one thing that is very interesting, which is the oversold level. So I define oversold level as 10, but bear in mind that this is not really the black and white. So it could be something like 10.1, 10.2, or 10.05, but as long as it's sort of like in the oversold level or near the oversold level of 10, then I'll count it. And the other important thing is that I need an overbought level, which is the 90. So if we look at the past, so only these two instances or these two events lead to an oversold. So first is definitely the 2019. So I should say 2018 December, that's the Christmas sell-off. So there's an oversold level for the stocks of S&P 500 below above the 50-day average. So you can imagine that is less than 10% of the stocks that can actually commit above the 50-day moving average. And subsequently after the oversold, then there is a momentum kickstart. So there's a momentum starter actually initiated right off the low there, and it needs to actually travel all the way above 90 so that it could become a strong momentum. So that is sort of like a momentum starter. So in order to do that, first it just need to hit the oversold level below 10, and also need to travel all the way to above 90. So that's actually qualified as a momentum starter. So if you look at that, once it completed, that actually marks the bottom. And in 2020 COVID low here in March, so we also get an oversold level, so that's below 10, although you can definitely see there are two instances. So one is definitely probably near February, and subsequently definitely in March, and there's an attempt to rally right here, but definitely fail. And after it hit the oversold level here, there is a strong momentum that just kickstart the rally. So there's a rally off the low, so marks the bottom, and there is a above the 90% in terms of the market breadth, above the 50-day moving average. So right after that, then we can definitely confirm that there is a ton of the momentum, there's a low or actual market bottom. Okay, so right now, here is it. So here is, we have a oversold level. So can you imagine that back in, I think that's probably back in May or maybe early June, we just had a oversold level that's very close to the COVID level. So is that bearish in terms of the market breadth? So we only get that in a few instances, which I'm just going to show you in a few minutes. But just back in May, we just experienced that, which is very close to the COVID low. And what happened after? So subsequently, we see this happen. So there's oversold below 10%, and now the market breadth actually is traveling up to about 76%. So it's almost like a straight line, very similar to the COVID low and very similar to the Christmas sell-off rally. So right now, I think it's quite important and critical that to see the market breadth above the 50-day average to commit above, or at least to test 90%. So if you can do that in the next few days or weeks, then I think that could really be the market bottom, just like the COVID low, or actually just like the 2018 Christmas sell-off low. So that could be the actual market bottom. So that's one possibility. And let's study a few years more back. So if you look at this, the 2011 and 2016. So in terms of the market, 2015-16, we know that is a huge trading range. So it's just kind of stuck within the trading range. And in terms of the market breadth, first, I think 2015, there is kind of an oversold level touching 10. I think it's just at 10. But look at the rally. So it just failed to touch 90. It did not really come in above 90. And it traveled all the way back to about, I think, 77. So right there. So that actually not qualified. But back in 2016, there is a oversold level, although I believe that if you just hover the chart, it did not really go below 10. In fact, it's probably something like 10.5 or 10.25. So, but I just think that it's still qualified as an oversold level right there. And eventually we see that there is a momentum starter right there. So the breadth trust is actually just shoots all the way back above 90%. So that actually corresponds to here. So that's actually the market bottom. So you can see that that's after that, we sort of just have a very shallow pullback and eventually just go up. And also back in 2011, so that's somewhere around here. So 2011, we definitely have this kind of the sell-off, but this sell-off is slightly different because in terms of the market breadth, although we get that oversold level, that's definitely below 10. But look at what happened after. So there is kind of a zigzag formation. So it's not as strong or as impulsive as the previous three instances. In here, the 2011 market breadth, we definitely have this zigzag type of the reaction. So that's probably correspond to another test here. So if you just correspond to the low here, which is here, and after that, we get a higher low. But here we get a lower low. So that's sort of like a divergence, a bullish divergence. But anyway, that's not the point. After we get a 90% commitment as a test, then the momentum sort of is just mature. And subsequently, although after that, we still get a very sharp pullback or sell-off in terms of the market breadth, which corresponds to there's a reaction. So in terms of, I think the pullback is sort of very deep as well, but still it's forming a higher low. And the rest is the history, just forming a higher low throughout. So that actually marks the bottom in 2011. All right. So the last one is actually 2009, which is the bottom of the global financial crisis, and also 2010. So again, here is another instances. We definitely get 2010. So, but look at the 2010. Although there is a oversold level below 10, and that corresponds to here. Subsequently, it's just not as smooth as the global financial crisis. So the trust is not as strong or impulsive. Instead, there is zigzag movement. So there is going up, coming down. So those sort of movement. But in terms of the actual bottom, so here is. So this is a bottom. So this pullback here actually corresponds to another pullback in the SPX. And then the rest is also the history. So that actually is another market bottom. So although in 2011, which we just talked about in a few minutes ago, there is another deep pullback as well. But back to the global financial crisis, there are only one instances which we have this kind of the situation where the market breadth actually dipped below 10, so oversold here. That's in 2009 March, and subsequently it just have a super rally and then go all the way above 90. So which correspond to this market bottom. So if you're wondering here or even here, so that's 2008, we did, although we get the oversold level below 10, but we did not get a strong impulsive momentum above 90. So it's just at about 80 or 80 plus here and here. So it doesn't really qualify as the super strong breadth trust for the momentum starter. So I think that actually forms a very interesting phenomenon, because every time we see this sort of the momentum happen, so from a deeply oversold and then go all the way back to the super overbought above 90, then that marks the bottom. So that's as far as the data that I can get since 2008 until the most current. So there are probably that's 2 years plus 2011, 2016, and also 2019, and also 2020. So at least 6 events. So we also experienced that kind of the deeply oversold below 10 and then rally all the way back above 90. So that actually marks the bottom. So I think that's very significant, because right now, although we still need a pending confirmation for the S&P, but so far I think the momentum is just super strong and is very close to the past events, like whether in the global financial crisis or whether it's in the 2018 Christmas sell-off. So it looks very similar in terms of the impulsive momentum. So I'm just wondering if it can just sort of commit itself, something like this, tested 90. So maybe that could actually brings S&P 500 all the way to about 43. So if we get that, then I think we probably have this kind of the strong momentum that actually qualify as the breadth trust for the momentum starter to mark the market bottom. So let's just keep this in mind, and let's get back to the indices. So Nikki say looking promising to call the bottom. Yeah, it just looks fascinating when I spot this. So I thought I might as well just share it, because I think there are many ways that you can spot for the bottom, but I think the most important part is actually to trade outperforming stocks, unless you are really into the index trading, which you can just do it swing by swing or even do the day trading. But in terms of you want to participate the next bull run, the outperforming stocks is the way to go. So as long as we stick to those that are outperforming, which are in the curator watch list, then look for the decent setup and just assign a decent risk. Try to be more conservative. I think that should be the way to go, and you should be very safe. And at the same time, you won't miss out the next bull run. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.